Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of automated trading, we will be starting off fresh. This is Monday, a new trading session, a new day and a new setup as well. We will be working with the tricks which we have been using for quite some time now. And in addition, we will be bringing in the time series forecast, the TSF. So we will be utilizing both these indicators in combinations. By now, I hope you are well familiar with the TRIX functionality as we have been working with it for past couple of days. And the TSF simply uses the linear regression calculation setup, but in this series, the calculation is done for each bar. That means we have this TSF tracking the price action, which is pretty much closer than the EMA. So we can even see it as a moving linear regression calculation. And so if you want more info on this, you can do bit of research as well. We are more concerned with the functionality, how we are going to help use it to help us determine the trend and then the entry and the exit points. Before we get started, this is a standard disclaimer. Here I would like to remind that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive testing for many months and maybe even years. And also, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. With that, we get started for the day, and let us see what we are trying to achieve in today's session. We will need to be trading with the trend to avoid getting caught on the wrong foot. So for that, we are of course trying to utilize the combination of these indicators, and in tandem it will help us what is the trend and what is the near term price action is pointing to. So for that matter, we are utilizing these tricks, and the combination here uh, in earlier part of the tricks, I think last week we were working on a setup where we were utilizing the tricks values both as a comparative and the absolute values as well. So in this series as well, we are going to be uh, paying attention to the absolute values as well. We will need the absolute value to be above 0 and rising for the buy trade, and below 0 and falling for the sell trade, and then the TSF comes into play. As you can see here, starting from the 14 GMT of 4th June, the TRIX values are rising, and that lasts till almost 12 GMT of 5th June, and then the value starts to fall. So here, in between this time, we will want to go in for a buy trade, and if we get any opportunity for that, we are of course not going to miss on that. So here, let us figure out, this is the time 14 GMT, so this here it is, this is the bar when the TRIX indicator gives us a go ahead, but on the TSF we will need the change of trend to be happening. It should be only during the initial hours after due consolidation that we want to get involved, and so we won't be looking to get involved directly as and when the TRIX conversion happens, but we will want that for past couple of hours, at least 2 to 3 hours, the consolidation was there, and the price action was below TRIX TSF levels, and then as and when the TSF values are breached and we get a candle close which is above the TSF range, then we will be going in for a fresh trade. So how we will determine the setup, I will just explain to you here. As you can see, this candle closes, this bar closes above TSF, and then we will be looking for a buy trade, but we will keep other requirement as well, that the prior three hourly bars. Now that we are working with the hourly setup, we will we will keep it at hourly, and 3 bars, the prior 3 bars should have closed below this TSF range, so we will be utilizing the look back period of 1, 2, and 3, and then we will be comparing those closing levels with the TSF levels, so that will help us to see if the consolidation has already happened, and also no trade should happen if there is simply sideways momentum and the price action just moves back and forth uh, above and below these TSF values. So to avoid that kind of situation, we are concerned with these prior values as well, and then we will be taking these historical candles here, then we will compare those closing levels to the TSF, and for a sell trade we will need the TRIX values to have been in negative territory, and that has not been the case for quite a while now. So here it was way back in third week of May. We had these TRIX values in negative territory for quite some time now, and then I think we might have got some trading opportunity somewhere here, but we don't really have the closing, which is about TSF. For a sale trade, we will need the TRIX values in negative territory, and those values should be falling. Sorry, yes, it should be falling in negative territory, and then the candle close, last hour's candle close, should be below the TSF value, whereas the prior 3 hourly candles should have closed above TSF. So as and when the price action completes its retracement and then again starts to lose traction and start to resume the downtrend, we will want to get involved, and here I don't think the condition is going to be fulfilled. Later on, if we see somewhere here, the time is 13 GMT and we have this prior 3 candles closing above it, but now we need to see if the TRIX values are still falling and negative territory. So 13 GMT we check, and we compare it to the 12 GMT, and as you can see the values are no longer falling. So because of that, no trade will happen at this point in time, as we need the TRIX values to be falling as well. So no sell trade will happen, but I hope you got the setup idea how we are designing this. So let us get started again. On the Visual J Forex platform, first thing we will need to do is the instrument subscription. For that, we are going to need the logical candles and if blocks, and here we will do the instrument subscription. We are actually, I think it will be better if we on candle as well, it will work pretty well. So we will simply bring in the, for a precise entry point, we will simply bring in the 1 minute historical candle to check for the closing price action and then define the entry point. So let us work with that. We are going to need 3 if blocks straight away, 2 for the instrument subscription, and then 1 more for defining the position amount. So here we go, and now default variables, default instrument, and then we take on tick, on candle, last ask, and here we take candle instrument, default instrument, and the candle instrument should match. So we put this condition, it should be equal, and then the candle instrument should match to the defined hard-coded instrument, which is going to be Euro USD. So here we bring in Euro USD. Oops. It is hassle here. We have to find Euro USD. Okay, we got this. Now it's the time to define the position amount, and for that we are going to look into the all position amount, either if there is a pending order or even in current open position. In both the cases, no fresh trade will be initiated. Now is the time to bring the indicator blocks, and as I said, we are going to compare the historical values as well. So for that we will need historical candles to compare those closing levels, and then on the TRIX side we will be utilizing the shift 1 and shift 2 values. So that we will do, we will check their absolute values, the magnitude, and then the comparison if it is falling or rising. And for TSF we will need again here 4 TSF blocks with shift 1, shift 2, shift 3, shift 4. So for last 4 hours TSF data and last 4 hours candle closing data will be compared to see if we have a desired combination. So let us bring in that. We'll need to bring in 2 TRIX blocks. So here comes the indicator and TRIX was there in the okay, we got the TRIX. We need to double it. So we got another TRIX block. And here the position amount, output values, input values. Now we will need to define it at 1 hour each. Hourly, and these as well hourly. Shift 1 and shift 2. And then we need to bring in the TSF, and that is part of mathematical, yes. As I said, here we will need 4 TSF blocks to be defined at 1 hour each for a default time period of 14 hours. So we are not really making any changes in the time factor here. it remains as at the default setting. Now let us connect this. We have got 4 TSF candles with values which needs to be defined. So here we got line 19 to line 22, which now needs to be given a hourly time frame. So let us make it hourly, this one as well, hourly. Okay, here this one too. So this will now become hourly, and here comes hourly again. So all these TSF parameters have been defined to do the calculation after each hour's candle close. And as I said, we need to be utilizing the look back data. So we look at the TSF value for last hour's close, last 1 hour, and then we will go back in time and utilize shift 2, shift 3, shift 4 for prior candles closing data. So here it is pretty simple, and we have this so here comes okay. So TSF blocks have been well defined. We have brought in the TRIX. Now is the time to bring in the historical candle data for last 4 hours. So we will need 4 candles of hourly historical data. So we take that and let us look for the info section here, and here we have got these historical candles. We will need 6 in all, 4 for hourly data and 2 for precise entry and exit points. And then with the help of all this data, we will be able to make a rational decision in most of the cases. So here the time frame needs to be changed to 1 hour each. Okay, so I hope you are able to see what we are trying to develop in today's session. So here and this one also needs to be changed, but first let us take historical candle data for the hourly and then 2 for 1 minute each. So here it comes. Four for hourly and 2 for historical data. So here we have these 4 more historical candles, and here comes the logical flow. Oh, okay, now let us change the parameters as per our requirement. And this, okay, this also needs to be changed to 1 hour each. And as I said, we are not really taking into account the current data. We at least need the confirmation to have come in last hour's candle close, and then for these hours we are free to initiate the new trade provided all other conditions are in place. So we need to change this shift to 1, and then for subsequent blocks 2, 3 and 4. So here we make this 1, and this one 2, and this one as 3, this one as 4, and then this will be defined at 1 minute each. So only these two blocks will be defined at 1 hour each now. So here hourly, this one as well will be needed to be changed to hourly time frame. Now these two candles needs to be converted to 1 minute each, as they are there simply to determine the entry and the exit. Shift 1 and shift 2. One minute. Okay, and this here will need to be shift to shift 2. So here we have defined these 6 crucial candles of 1 hour and 1 minute respectively, and then these are going to come handy while determining the entry and the trend. So we have done this TSF and then TRIX and the historical candles. Now, though I had not listed it, still we are going to need the ATR values to do the calculation for stop loss and the target. So we again look for ATR. Oh, indicator. Okay, here we got the ATR. Now ATR can be utilized in terms of hour or even in terms of day for for helping us pinpointing the entry and the exit point. So here input values, we will take hourly ATR here, so that will keep abreast of the latest volatility. So here we are going to utilize the hourly ATR setup, and the shift will be of 1, the look back period is 1, and then we will take this value of ATR defined at 1 hour to then do the necessary calculation for the optimizing our trading setup. So here today we have brought these indicators which we feel are going to be needed for determining our trading setup's profitability, and then the whole setup will need to be developed over next couple of sessions, and after testing only we will get to see how it is functioning. But on the chart it is indeed looking promising, so we will continue to work with this. So today we have brought in these indicators, and now tomorrow will be the day to do all the required calculations to make sure that we are getting the entry and the exit right. So that's it for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. I'll be back tomorrow. See you soon. Goodbye.